What is a self-directed IRA? You're about to find out. One of the main questions people ask when saving for retirement is, how can I maximize investment growth? For some investors, relying solely on stocks, bonds, mutual funds, and CDs through their 401k or IRA might not be enough. In today's tricky financial climate, with risky stock market and ongoing inflation, these traditional assets may not offer as much diversity or long-term security as an investor wants. This is where a self-directed IRA can come in handy. A self-directed IRA allows you to invest in a variety of different assets. This means you could have more choices to not only hedge your losses, but to maintain your gains during tough economic times, and potentially keep your assets secure during market volatility. So buckle up, because today we're going to show you exactly how a self-directed IRA works and how a little-known IRS loophole could help you potentially protect and grow your money with a gold IRA. So you might want to stick around. Unless you're like losing money and then you can just leave, that's totally fine. All right, let's get started. So what exactly is a self-directed IRA? This could be real estate, promissory notes, cryptocurrency, mineral rights, water rights, and oil and gas. Or what we see most often, precious metals such as gold and silver. Self-directed IRAs require the use of a custodian or trustee who administers the account, but you, the account holder, get to manage it directly. We'll show you how this could potentially benefit your bottom line soon enough, so keep watching. Per IRS regulations, your self-directed IRA needs to have a custodian, a company that's responsible for keeping your investments safe and ensuring that all IRS and government regulations are followed to avoid penalties. You don't want to upset the IRS, do you? I didn't think so. Custodians for traditional IRAs are typically banks, insurance companies, brokerage firms, or mutual fund companies. While these institutions can also service a self-directed IRA, it may be more useful to find a qualified self-directed IRA custodian who specializes in, you guessed it, precious metals investing. Choosing a custodian with knowledge of self-directed gold IRAs may be a good choice to help you make decisions about what types of precious metals to invest in so that they are IRS approved. This is especially true if you're looking to do a gold 401k rollover. A simple mistake here could result in severe taxes and penalties. You don't want to make a mistake here, trust me. It could hurt a lot. Now let's move on to the good stuff, the advantages of a gold IRA. A gold IRA is simply a specific type of self-directed IRA that focuses on investing in precious metals such as, that's right, gold. Gold IRAs can offer a laundry list of advantages for investors. Whether you're nearing retirement or even early in your career, you can mitigate the growing investment risks, diversify your investment portfolio, successfully weather market fluctuations, and you still get similar tax advantages that come with a traditional IRA. Sounds like a no-brainer, right? Now here's a little secret. You do not need to pour all your assets into a gold IRA. It's called diversification for a reason. So that means moving a reasonable percentage of your investments into precious metals to reap the long-term benefits and potentially protect your money. A good gold company should never try to convince you to move all your eggs into one basket. That's why thousands of retirement savers and investors use Goldco. They want you to be diversified. Got it? Good. All right, moving on. What does IRA-eligible gold mean? You certainly don't want to screw this part up. Gold and other precious metals need to meet specific IRS standards according to Section 408M3 of the Internal Revenue Code. These standards address gold coins and bars and set their level of fineness and purity, in addition to other contribution and storage rules. Here's a quick breakdown. The gold must have a fineness of 0.995. That means 99.5% purity. The gold has to be held by a custodian. Standard IRA contribution limits apply. That's $6,500 per year or $7,500 per year if you're over age 50. Gold you already own cannot be added to a gold IRA. When you open a gold IRA, you have to purchase new gold to put in. In addition to these rules, there are other general regulations that also apply to IRAs, such as required minimum distributions, RMD, contribution limits, and withdrawals. It's important to look for any recent changes that may affect these regulations, such as new legislation or changes in the law. Now for the exciting stuff. How to actually place physical gold in an IRA using a little-known IRS loophole that could save you a fortune in penalties and fees. You ready? So how do you place physical gold in an IRA? 1. Choose the type of self-directed IRA. The type of self-directed gold IRA you set up will be dependent on how you want to fund your IRA. Most investors will choose to open a traditional gold IRA so that they can invest with pre-tax dollars or rollover funds from existing retirement accounts. Investors transferring or rolling over funds from a Roth account will choose a Roth Gold IRA. You can also open a Roth Gold IRA if you want to do a Roth conversion. 2. Decide on a funding source. When funding your gold IRA, you can use cash or roll over your funds from a 401k, 403b, 457b, or TSP plan. You also have the option of transferring funds from a traditional IRA, Roth IRA, SEP IRA, or Simple IRA. Be sure to check with your tax advisor before making any changes, though, because there can be major tax implications. And who would have thought the IRS isn't very forgiving when it comes to making mistakes? 3. Choose a gold-qualified, self-directed gold IRA custodian. As we discussed, gold IRA assets need to be stored with a custodian per IRS regulations. Working with precious metals experts like those at Goldco will help you find a custodian experienced with gold IRA investing so your investments are made properly. 4. Fund your self-directed gold IRA. If you're rolling over, you'll sell assets into your current retirement accounts and roll them over into your gold IRA. It's very important to work with a gold IRA specialist to make sure that the rollover process adheres to all IRS regulations. I'll say it again, you don't want to make a costly mistake here. 5. Select your metals. Now that your self-directed gold IRA is funded, it's time to choose which gold coins or bars you want to invest in. Remember to check if your gold is eligible based on the IRS codes. Collectibles like coins, stamps, antiques, and artwork are not eligible, with some exceptions for gold IRA coins. Choose gold dealers that have at least 5 years of industry experience to avoid counterfeit products, just like, you guessed it, Goldco. Are you catching on to the hints? Good. Every mint keeps records of the coins they produce, which will help prevent you from purchasing a counterfeit product. This is why it's critical that you take the time to work with an experienced company, once again, like Goldco. Safeguarding your retirement with precious metals. By setting up a self-directed gold IRA, you can rest easy knowing that your assets are safe and secure and that your money may be better protected from stock market fluctuations, inflation, or defaulting bonds. Our national debt is growing exponentially, and inflation doesn't look to be transitory after all. So it's critical that you protect yourself. With the economy being up in the air and stock markets fluctuating in full swing, a gold IRA may be just the solution to protecting your investments. Setting up a self-directed gold IRA can be very easy, especially with the help of Goldco's experts. So give them a call today to see if precious metals are right for you.